What's going on, lovely people of the internet? It's Hootmoney here with another video for you guys today. Today we're going to be talking about Muln stock because there has been a decrease in volatility in this stock. So with that being said, we're going to be talking about where this thing could be heading in the coming days, weeks. Even we'll do some short-term technical analysis as well. Anyways, if you guys enjoy this content, drop a like on the video, subscribe to the channel if y'all are new, hit that post notification bell so you never miss an alert here on this channel. Also join my free Discord. It's the third link in the pinned comment down below. We also got Hootmoney trade alerts. Those are heating up. That's the first link in the description down below. But with all that being said, my friends, let's get right into the video. Alright, so Muln has obviously been shooting up like absolute crazy, and I'm very, very impressed in the way that it has been holding up its price action over the past few days with declining volume. Now, as of this morning, it had this apparent bull flag, correct? And at market open, this bull flag kind of got destroyed. As you guys can see, it broke out of the bull flag to the upside and the downside. And it did the same thing here. It's doing the same exact thing right here. These are traps. These all are bear traps, bull traps, all of that. What I have found to be a bit more consistent than just trading those bull flags is trading the fib level. Because as you guys can see, all of this price action is pretty much jam-packed between these two fib levels on the chart. So with that said, the lower fib level is 294 and the upper fib level is 341. So if you'd like, you can set an alert at each of these respective price levels. Weekly chart still looking phenomenal. Same with the 5-day, same with the 3-day, same with the 2-day, although it is starting to curve down on that VWAP on the 2-day. The daily chart got its red dot for the first time, as well as a red Heikin-Ashi candle for the first time in almost 2 weeks right here. From the bottom of the last rally, this stock is up 315%. So there's definitely some downside risk. I don't want anyone to ignore it. No, I'm not saying the price is going to absolutely crater. In fact, there's probably some more upside left in this, but I do want you guys to be aware of the risks at the same time. 4-hour chart, you're seeing the green money flow as well as the VWAP pointing up, and it is getting back to that 0 mark on the blue wave, meaning that the price has likely reset to the point where it could go back up. Hourly chart as well, we're seeing a lot of negative blue waves, meaning that there potentially could be some upside to come out of this. We also saw a brief red money flow right over here, and now it's back to being in the green, which is good news. And because of this, I definitely expect it short term to at least test this fib level at 340 once again. 15-minute chart as well shows that there could be some cooling off of the red price action. I'd like to quickly thank the sponsor of today's video, which is Moomoo, a licensed FINRA broker doing absolutely zero payment for order flow. They're running a promotion where Hootmoney is giving you guys free lotto tickets and free lunch. Hear me out. If you deposit $1 on their platform, you can get up to $7,000 in free stock, potentially getting Amazon, Tesla, Google stock, right? And you get a free share of NEO. This is the free lunch. This goes for $21 per share with a deposit of $1. So a free $21 right there. Free lunch on Hootmoney, plus 2 free stocks up to $3,500, 2 free lotto tickets on Hootmoney. Links are below in the description or pinned comment section. Let's get right back into the video. What we're seeing here on Ortex is absolute insanity. It's showing that there's a 50% increase in short interest, and that 17 million shares were borrowed as of today. Now, these are likely not being shorted, and I don't completely understand Ortex's algorithm right here because they're saying there's only 11.68 million shares being shorted right now. Now, I can't really tell you guys where these shares come from, but I do believe it probably has something to do with the free float increasing to 155 million shares. Now there's more shares available to be shorted. Overall, the utilization has stayed at 100% this whole time. Cost to borrow has also been increasing. So overall, it doesn't make too much sense. However, if the current short interest is 11.68 million shares and the shares on loan is about 30 million, that means they have a 20 million share excess of shares on loan than the current estimated short interest, which definitely lets the market makers do some monkey business. I explained how exactly that works in yesterday's video on MULN, so check that out if you want that explanation. Moving into Fintel, you can see MULN is number 5 on that short squeeze leaderboard with a 98.19 short squeeze score. We also see that the short share availability has come down throughout the day, and we're seeing that the cost to borrow has increased to 20% here on Fintel. We've seen the cost to borrow increase each and every single day over the past 2 weeks. Short volume ratio is still high as ever. It's at 39% currently. You can see how the short volume ratio is a lot lower back here opposed to what it's at now, over 40%. Most days. Yesterday was slightly lower. I'm still waiting patiently for this failure to deliver data from March. It's going to be crazy. It was 6 million before it really started popping off here in February. So to see what it's going to be in March is just going to be absolutely insane. And I think those numbers alone could potentially ignite an absolutely insane rally. Looking at the unusual whale call option flow, $10,000 in premium or more, ask side only, we can get a general idea of the sentiment of people dropping over $10,000 on call options or more, and as you guys can see, it's 95% bullish. So overall, option buyers are extremely bullish still. We're also seeing, if we get rid of puts, we go bid and ask side, that more people are buying calls today than selling. It's 54% buyers, 46% sellers. So overall, unless you guys think these people dropping tons and tons of money on MULN options are wrong, I think there's probably some upside left in this bad boy. At the same time, we're seeing that call option volume is at a very low level, and there's only 20 more minutes left in the market open right now. Every single time in the past month we've seen a dip this low, it leads to an absolutely explosive rally. You can also see right here that the implied volatility has been falling off on MULN. It was chilling around 400% for quite some time, but right now it is getting closer to 250%. So the options are becoming a lot cheaper, and although it's nowhere near where it was before at 150 to 100%, seeing this dip significantly is a very good sign. Cheap implied volatility could bring in a load of new buyers into the stock as well. Biggest option trades of the day were 70% bullish. None of them were buying of a put option. The 2 put option trades were selling of put options, and the bearish trades were just selling of call options. Perhaps they were just de-risking, but overall still very bullish. Another potential risk that we could be running into is the max pain is at $2.50 for April 14th, meaning that market makers have the incentive to drive this thing down another 50 cents to $2.50. And honestly, it could be slightly lower than $2.50 as there are 20,000 call options in the money at this strike price. So max pain, for those that don't know, this is the strike price that causes the most amount of option buyers to expire worthless, and the theory behind it is that the stock price tends to gravitate towards the price that makes the most amount of people lose money in options. So this is something I don't talk about too much, and this is the implied volatility skew. As you guys can see, for April 14th, which is this top value on the chart, it has the most implied volatility by far. This means that these option contracts are much more expensive and are pricing in a much larger move than the later expiration dates such as May, July, and October. So this is why you'll still see call option sellers and call options buyers going for this October expiration. It's because it's overall the cheapest contracts. And just looking at the implied volatility differences here on Webull, you guys can see it's 200%, just under 200% at the money for October, and it's at 270% for April. You're also losing almost $2 a day in theta decay, and that increases as you get closer to the expiration for this April 14th expiration. But as you guys can see in October, you're losing only 35 cents a day in theta decay. So overall, understand the closer your expiration, you're probably more likely to lose Hootmoney. Gamma exposure is also still freaking ridiculous for MULN. There's a huge gamma ramp here, so any volatile moves to the upside can be perpetuated from market makers hedging their delta positions. Anyways, my friends, that's about it for the video. I hope you guys enjoyed the update. Drop a like if you guys did. Subscribe to the channel if y'all are new. Join Hootmoney Discord. It's that third link in the pinned comment section down below. I'd love to see a bunch of Mullen apes in there. And check out Moomoo if you want up to $7,000 in free stock as long as you deposit $1 on their platform. That link is below in the description or pinned comment section. Also, Hootmoney trade alerts have been on absolute fire lately. We've been printing some money. That's the first link in the description. Anyways, guys, Hootmoney will be signing out for now.